So Warren Buffett has retired as of December 31st. So I thought it's time to look at Berkshire Hathaway stock. So they have two classes of stocks, Class A and B. We look at Class A, which is currently trading at around $753,000. That's huge. I remember this stock trading at around 100,000 in 2009. Yeah, it was 80,000. And since then, it's been a huge bull run for Berkshire. They've done close to 850%. That's huge. I hope you had a chance to invest in Berkshire during this time frame. But Berkshire has always done well over the long run. If you look at the maximum range that we have since 1993, the stock has returned a CAGR of 13.36%, which is the cumulative average annual growth rate. And it has done better than the market. If you see, the difference between market and Berkshire is pretty huge. And even if you look at 30 years, Berkshire has beaten the market. Over the last 20 years, it's pretty close to the market, but it's still beating the market. And over the last 10 years, market and Berkshire are pretty close to each other. That's because Berkshire has grown into a huge company, and it's very hard to keep getting the same returns that investors got in the past when they were able to operate with smaller amounts. Because the market cap of Berkshire is over 1 trillion now. And Buffett himself has mentioned that investors should not expect Berkshire Hathaway stock to beat the market. But he did confirm that the stock will continue to do decently well in the long run because they hold quality companies in the form of shares where they own a percentage of each of those companies. They also have 60 plus, I guess, fully owned companies. I don't know the exact number. In addition to that, they have cash. Berkshire holds $300 plus billion in cash. So it's a combination of good investments. And that's the reason why a lot of investors believe that Berkshire Hathaway could be a good stock to own in the long run. It is just my opinion. People have different opinions about individual companies. So you need to do your research before making any decisions. Now getting back to our super investors page. Before that, we'll check the B class and the price it is trading at. The B class trades at $502, which is technically 1,500 times smaller than the A class. That's the only difference. Now, within Stocksdojo, we have the super investors page. So, super investors are those investors who manage more than $100 million in their portfolio, I believe. And Berkshire Hathaway qualifies because they own more than 200, 300 billion. But we only show the US holdings as Stocksdojo is built for US stocks. And as you see, there is this aggregated top 100 holdings, which is the most owned US stocks across all super investors based on their historical disclosures. We don't look at the dollar value. Instead, we look at the percentage holding across all the super investors. And Microsoft is at the top, followed by Amazon, Bank of America, and Google. But Google has two tickers, and if you combine these two, it is bigger than Microsoft. So at this moment, Google is the leader in the pack. And if you scroll, you'll see all the remaining 100 stocks and the percentage weight across the board. Now, if I search for Buffett, you're going to see the list of stocks that are within the Buffett portfolio. If you go into the manager's holdings, they have $254 billion of US stocks. And we capture quarters starting from Q1 2024. And the list here is the latest quarter. And Apple is the leader at 60 billion, which is 24% of their US stock portfolio. And they have been reducing their Apple position in the last few quarters. As you can see, between last quarter and this quarter, they have reduced it by 15%. The company has performed well. The stock has grown by almost 30% within their portfolio since 2024. The second largest position is Amex. But before we go there, I'm curious to see how much Apple. Oh, they had $135 billion in Apple the Q1 of 2024, which was 42% of their holdings. As you can see, they have reduced it by a lot, and their estimated price was around 171. Currently, the stock trades at 273. Great investment for Buffett and Berkshire. Amex is their second biggest holding at $50 billion. It has been doing well in the last 2 years. It also holds 20% weight in their US stock portfolio. Another interesting fact is the overall market cap is just 250 billion, meaning almost 20% is owned by Buffett and Berkshire. Now, their third position is Bank of America, which is 30 billion. They have done well in the last 2 years. Coke has been their long-term holding. They have had it since 1987, I believe. And it has not performed really well in the last 2 years, but Coke is a dividend-paying stock, and Berkshire receives almost $800 million in dividends from Coke every year. And that dividend is growing year after year because they don't seem to cut their dividends. And let's take a look at Coke's dividends. Yeah, since 1987, the dividends have been just going in one direction, that is up. The last 10 years, their dividend CAGR is 4.45%, which means they've been growing their dividend at that average over the last 10 years. You'll see a similar average for the last 5 years. And the yield is pretty huge at almost 3%. So the 800 million is going to be much bigger 10 years down the line or even 20 years down the line. And I believe Coke could be around for a very long time. Now, their fifth largest position is Chevron, which is the oil company, and that is another 20 billion and 7.5% of their overall US portfolio. And I think Chevron also is a good dividend paying stock, and they pay close to 4.5%, and their 10-year CAGR is slightly larger than what we saw for Coke. So, and they've been growing their dividends. I don't see any dividend cuts at all from Chevron since I was born, I guess. So again, Buffett or Berkshire doesn't pay a dividend, but they hold high quality dividend paying stocks. And based on what I've heard from Buffett, the reason why they're not paying dividends to their investors is because they believe that that money could be put to good use or better use within their universe of companies. They own several fully owned companies, and I think they would deploy this capital wherever required within that universe. If there is no space to deploy that capital, they may be willing to pay a dividend in the future. That's what I heard in the past. We'll have to wait and see. And Occidental Petroleum is again oil. We have Moody's, Kraft and Heinz. That one did not do well for Berkshire. It was one of their failed investments. but they're still holding on to it. And as you can see, it has not done well in the past 2 years either. They have recently purchased Google, which is a surprising investment because they invested close to or almost $4.5 billion in Alphabet, which is huge. And that's a new position starting the latest quarter of this year. Sorry, last year. We are in the new year now. And Google has been on a rip in the last few months. As you can see, the last 1 year, the company has returned 64%. Year to date, 65%. So, seems like Berkshire bought this around this time. It has still gone up 35% since they bought it. The timing is perfect. Google is doing pretty well. We'll have a separate discussion on Google in the future. And so on and so forth. We have all these stocks. We also have a couple of billion in Amazon. They used to have Snowflake. I work in Snowflake. I use Snowflake in my daily work activities, and I've been working with them for the last 7 years or so. Berkshire bought $1 billion in Snowflake when they started their IPO a few years back. They got a discount. They got to buy the stock at $120 while it was trading, or while it opened at $240. Let's take a quick look. Snowflake is currently trading at 219. Yeah, Buffett got it at 120. They recently sold off that position. I'm not sure at what price, but the interesting fact is when they bought it during the IPO, the stock exploded to close to 400. I'm not sure it was a good idea to hold on to it afterwards. If they had sold it here, they could have made almost 4x their money. I believe they sold somewhere here for a profit, which is still good. Let me take a look at the full list. Do I see Snowflake? No, I don't. So yeah, it's fully sold, and maybe in this quarter we had Snowflake. Nope. What about Q1? Yeah. So we had Snowflake in 2024 Q1, and as I said, they had $1 billion in it. And in Q2, they still held Snowflake. Nope. Yeah, that's when they sold it off. Okay. See, this is the kind of analysis that you could do and get lost in this page for a very long time. Now, it is also possible to clone the portfolio. We have this clone top 30 historical. So when you click on this, it will take you to the screen. It's all automated. So the stocks are allocated according to their weights. And that's what you see here. You can analyze the portfolio. There are 25 stocks which qualify for this list. And as you can see, we'll save this later. The stock has performed, or the portfolio of 25 stocks have performed really well in the last 10 years or so. Yep. And we have a CAGR of 18.51%. That's huge. That's because they have introduced Google, Amazon, and Apple in their portfolio, which have done extremely well on their own. Anyways, if you want to see how this portfolio would have performed in the past, this is the place to look at it. And the total returns, the CAGR, maximum drawdown, best year, worst year, and so on and so forth will be an indicator to project the health of this particular portfolio. So it will help you make informed decisions while you analyze different portfolios of these super investors. And in the last 1 year, it's 13%. In the last 5 years, it's 16%. In the last 10 years, 18 and so forth percentage. So it's been doing pretty well. This is a heat map of all the percentage holdings. And you can also see how the individual stocks are performed in the time frame that you have selected. No surprise that Apple, I mean, pretty much every stock here is doing well except for Occidental Petroleum and KC. Yeah, so that's the portfolio builder page. You can actually save that portfolio if you require and track it for future use. And you can do the same across multiple portfolios. We have another page here, which is going to hold all the super investors. You can search for them. Like you can search for Peter Thiel, and there you see. You can search for Bill Gates, Bill and Melinda Gates Foundation. Yeah, once you click on it, it'll capture the values and analyze the portfolio automatically. You can save if you want. Similar results as you got for Berkshire Hathaway. In the last 5 years, they've been doing well. Yeah, Bill Gates also has a good portfolio. The start date is dependent on the stocks that are held by the portfolio. You see here the start date is limited by this particular ticker. If you want, you can remove this ticker to increase your date range. So from the list of stocks, I could find the one which is holding it back. I think these companies could be holding it back. You can remove all of these. Yeah, let's see. Now you can retest the portfolio. And we have these 12 stocks remaining. Yeah, as you see, the start date has pulled back to 2015, and it is limited by KHC, so on and so forth. You can remove and test it. The maximum drawdown is just 22%, which is awesome, and the worst here is just 8%. So technically, they have done much better than the market during the COVID crash, which was close to 30%. Again, you have the heat map, percentages, and portfolio holdings. Oh, we also have a forward projection for the dividends. This is mostly designed for dividend investors. As you can see, this one pays a very small dividend of 135 if you held this portfolio for the next 10 years. So what I've done here is given you the option to select the number of years you want to hold this portfolio and what is your expectation of the stock price growth and dividend growth. I've given 6% because these are nominal growth rates that are expected from the market overall. If you reinvest those dividends, if you don't contribute to that, you will be getting dividends of $135 from your portfolio, Bill Gates portfolio, right? So, and you can also change it. And if you're too young, maybe you have 40 years left in your dividend portfolio investing career. So in that case, a $10,000 capital would end up being $136,000, and you'd get close to $1,000 dividend. So the beauty about this page is this dividend percentage is directly tied to the portfolio that we built earlier. So you could build your own portfolio, own dividend portfolio, and see how it works. In fact, I have my own dividend portfolio out here. I've been testing multiple portfolios. So let's say I want to edit this portfolio, which is technically creating another version of this portfolio. So if I come back to the screen to edit the portfolio, you will still get to analyze this portfolio, and the dividend stocks that I own will give me a dividend yield of $2,300 if I hold it for the next 10 years. If I hold it for the next 30 years, I would end up with $14,000, which is more than $1,000 per month, and my end capital of $10,000 is going to be $454,000, mostly because of the dividend yield. Oh, sorry, the initial amount is 31,000. That's what I thought. This is pretty huge, right? So my initial $31,000 has grown to $454,000 if I set these assumptions of 6% stock price growth and 6% dividend growth. If I don't reinvest the dividends, you see, there's a huge difference. If I reinvest it, it's going to be 14,000. All of that is captured in the graph here. If you are too curious, you can also check what would it be in 100 years, right? You see, it's like just $7 million, and my 31,000 has become 232 million. If I have kids and grandkids, they'll be pretty rich. That's about it, I guess, for today. We will catch up later on more topics. Thank you very much for joining.